Hello friends, welcome to Gupta Education World. In this video, I will explain you the various taxation laws relating to mutual funds with practical examples and tax slab charts applicable for individuals. So please see the video till the last. And if you have not subscribed the channel till now, please press the subscribe button and bell button available below the video to get the notifications of new videos on time. So without wasting your time, let's begin the topic. Presently, I am receiving many queries. What are the income tax slabs applicable for individuals? Which type of mutual funds are there from taxation point of view? What are the tax rates applicable for mutual funds? Whether there is any change in financial year 2018-19 in taxation of mutual funds in comparison to financial year 2017-18, and how to calculate capital gain tax of mutual funds. Firstly, I will explain you the income tax slabs for individuals. If your income is less than 2,50,000, tax rate is 0, and for income more than 2,50,000 but up to 5 lakh, the tax rate is 5%. And if your income is more than 5 lakh but less than 10 lakh, income tax rate is 20%. And for income more than 10 lakh, it is 30%. And in case of resident individuals of the age of 60 years or above but below 80 years, the basic exemption limit is 3 lakh. In case of resident individual of age of 80 years or above, the basic exemption limit is 5 lakh. The surcharge is also have to be paid by you. This is at the rate of 10% of base tax where income exceeds rupees 1 crore. But if your income is more than 50 lakh but not less than 1 crore, surcharge is 10%. In addition to surcharge, you have to pay cess also. And for cess, there is no limit of income. For financial year 17-18, this cess is 3%. But from 2018-19, the cess is 4%. But for individuals whose income is less than 3,50,000, there is a tax rebate of rupees 2,500. Now comes to what are the other types of mutual funds from taxation point of view. There are two types of mutual funds from taxation point of view. One is equity oriented fund, where more than 65% of fund invested in equity shares in domestic companies. And second one is other than equity oriented funds. For example, debt mutual fund, liquid fund, and fund where less than 65% of the fund invested in equity shares. Now comes to taxation of equity oriented fund. If the fund you have held for more than 12 months, it is called long-term capital gain. And for financial year 2017-18, there is no tax on this, provided you have paid securities transaction tax on this. But from financial year 2018-19, it is taxable at the rate of 10% if you have earned more than rupees 1 lakh in a financial year. But if you have held the units for 12 months or less period, then you have to pay tax at the rate 15% plus applicable surcharge plus applicable cess. Now comes to taxation of other than equity oriented fund. There is no change in financial year 17-18 and 18-19 for these type of funds. If you have hold the units for more than 36 months, then you have to pay the tax at the rate of 20% with indexation plus applicable surcharge plus applicable cess. However, for NRI individuals, if fund is unlisted, then tax will be 10% without indexation benefit and foreign currency fluctuation benefit plus applicable surcharge plus applicable cess. But if the fund is held for less than 36 months, then the tax rate will be applicable tax slab as explained to you in previous slide plus applicable surcharge plus applicable cess. Now question is how to compute the capital gain on mutual funds. For that you have to see this full value of consideration, and you have to deduct expenditure incurred wholly and exclusively in connection with transfer of mutual funds, for example brokerage, commission, etc. But please mind that you have to exclude securities transaction tax paid on this transaction, and after that you can have to reduce indexed cost of acquisition excluding STT, and rest of the balance is your capital gain. But indexation benefit is applicable only for long-term mutual funds. Now I will give you the practical example for computation of capital gain on equity fund. Suppose in the month of May 2015, Mr. Y purchased 1000 units of ABC Top 500 fund at the rate of Rs 1500 per unit. These units were sold in June 2018 at the rate of Rs 2800 per unit. The closing NAV of the fund on January 31, 2018 was Rs 2100 per unit. Brokerage and other charges paid Rs 1000 including STT of Rs 280. Now you have to compute the capital gain in this case. Now in this case our full value consideration is 28 lakh, 1000 into 2800 less expenditure incurred excluding STT paid. In this case we have paid 1000 brokerage and 280 as STT. So we have to reduce only 720 from 28 lakh. Net sales consideration is 27 lakh 99,280. From this you have to reduce your cost of acquisition, and from financial year 2018-19 there is one clause that if you have held the units before 31st January 2018, then you can take the cost of acquisition as whatever actual cost of acquisition for you, or closing NAV as on 31st December 2018, whichever is more. In this case our cost of acquisition will be 2100. So our net cost of acquisition is 21 lakh. So our long-term capital gain is 6 lakh 99,280. Out of this amount, rupees 1 lakh is exempt and rupees 5 lakh 99,280 is taxable as capital gain, on which you have to pay 10% plus surcharge plus cess. Now we will see the practical example of computation of capital gain other than equity fund. In the month of January 2014, Mr. X purchased 100 units of ABC Dynamic Bond Fund at the rate of Rs 200 per unit. These units were sold in April 2018 at Rs 350 per unit. Brokerage and other charges paid Rs 100, including STT of Rs 35. What will be the amount of capital gain in this case? Cost inflation index for financial year 2013-14 is 220, and for financial year 2018-19 is 280. Now in this case our sales consideration will be 350 into 100, that is 35,000. From this we have to exclude the expenditure incurred in relation to this sale, that is 100 minus 35, that means excluding STT. Now rupees 65 is our expenditure. Now net sales consideration will be 35,000 minus 65, that is 34,935. From this you can exclude cost of acquisition, and because this is the long-term capital gain, so you can take index cost of acquisition, and indexation chart is 220 for financial year 2013-14 and 280 for financial year 2018-19. So our index cost of acquisition will be 20,000 into 280 divided by 220. So our cost is 25,455. So our long-term capital gain will be 9,480. I hope you have understood all the examples, and if you have any queries, you please mention in the comment box. And if you like this video, please press like button. Share this video to your friends and colleagues. And don't forget to press on subscribe button and bell button to get notifications of videos uploaded in future by us. Thank you friends. Good day. Jai Hind and Vande Mataram.